Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is the third largest non-alcoholic beverage company a good investment? In this video we will be analyzing if Keurig Dr Pepper stock is a buy. Could Keurig Dr Pepper, stock ticker symbol KDP, be ready for a rapid rise? Let's find out. Before we start, a special thanks to Loki, the god of mischief, for requesting this analysis. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Keurig Dr Pepper. Keurig Dr Pepper, formerly known as Green Mountain Coffee Roasters, was founded in 1981. The growing company is a leader in both hot and cold beverages, offering a massive portfolio of over 125 owned, licensed, and partnered brands including Dr Pepper Soda, Snapple Teas, Mart's Juices, and Keurig Coffee. After the coffee company, renamed Keurig, merged with Dr Pepper Snapple in 2018, growth took off rapidly. Today, their headquarters are currently split between Frisco, Texas and Burlington, Massachusetts, with over 28,000 employees. Now let's look at the price action. Starting with the 1-year chart, we see that Keurig Dr Pepper had a CAGR of about -9%. Zooming out to the 5-year chart, we see that Keurig Dr Pepper had a CAGR of 3%. Keurig Dr Pepper share price had been a steady climber but has pulled back recently. This may represent a buying opportunity for interested investors, but it could also be a trap. If we perform a backtest comparison of investing $10,000 in Keurig Dr Pepper versus the S&P 500, we find some poor results for Keurig Dr Pepper. In that comparison with the S&P 500, $10,000 invested in Keurig Dr Pepper would have grown to $13,526 or a 6% CAGR versus $22,796 or a 17% CAGR if invested in the S&P 500. This demonstrates underperformance for Keurig Dr Pepper. A Keurig Dr Pepper investment would have also been more volatile with a 20% standard deviation versus 18% for the S&P 500. Keurig Dr Pepper underperformed the S&P 500 in terms of the best year performance, for which Keurig Dr Pepper grew 18% versus S&P 500 31%, but outperformed the worst year performance where Keurig Dr Pepper fell only 7% versus the S&P 500 18% fall. In terms of max drawdown, Keurig Dr Pepper fell 21%, more than the max drawdown of 24% for the S&P 500. Keurig Dr Pepper did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Now let's hop over to market share and take a look at Keurig Dr Pepper's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under beverage and see that Keurig Dr Pepper is categorized under non-alcoholic beverage. Expanding the non-alcoholic beverage tab, we can see that Keurig Dr Pepper has the third largest market share in this sub-industry but does not appear to be growing much, if at all. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Keurig Dr Pepper, KDP, and see that the market share is 1.56% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Keurig Dr Pepper attracts a relatively small proportion of food spend. The 5-year market share CAGR for Keurig Dr Pepper is 0.23%. This means that Keurig Dr Pepper's market share is barely keeping up with the industry's growth. If we start in 2019, we see that the market share was 1.54%, 1.62% in 2020, 1.52% in 2021. 1.53% in 2022, and rose to 1.56% over the trailing 12 months. While Keurig Dr Pepper is essentially not growing, it is comforting to see that they are not losing market share. In this version of market share, we can also compare Keurig Dr Pepper with other companies or entire industries. When we type in beverage, we can compare the market share data for Keurig Dr Pepper among the entire beverage industry. Keurig Dr Pepper holds a respectable 4% share of beverage spend. To put that in perspective, 4 cents of every dollar spent on beverages goes to Keurig Dr Pepper. Similarly to its market share growth across all food, beverage, and restaurant stocks, Keurig Dr Pepper is holding its market share steady among beverage companies. This is not ideal, but it could be worse. Let's take a look at the fundamentals to learn more. Gross margin is 55%. This is on par with similar companies in the industry. Revenue has compounded at around 7% over the past 5 years and has reached over $14.8 billion most recently. Nice steady growth. Looking at cash flow, we see a minus 14% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 7% CAGR. As a result, free cash flow has grown at a minus 19% CAGR. With both operating cash flow and capex declining over the years, Keurig Dr Pepper has been producing less and less free cash flow. Having less free cash flow severely restricts the company's ability to allocate capital efficiently. Weighted average shares outstanding have fallen over the last 5 years, going from 1.419 billion shares in 2019 to 1.408 billion shares most recently. Keurig Dr Pepper has been buying back a lot of shares. While share buybacks are nice, I think that free cash flow might be better invested in growing operating cash flow for the company. Now let's view return on invested capital. Return on invested capital has risen from 3.5% in 2019 to 5% in 2023. This value is way too low, but it is improving slowly. Perhaps this means that the company's capex investments are starting to produce returns. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from minus 118 days in 2019 to minus 137 days most recently, Keurig Dr Pepper has gotten more efficient over time. It is always great to see a negative cash conversion cycle. Now, let's look at Keurig Dr Pepper's debt. The net debt to EBITDA has fallen over the past 5 years, going from 5 in 2019 to 3.8 most recently. While this debt level is kind of high, the trend downwards is in the right direction. Last, let's explore dividends. Current dividend yield is 2.7% with a dividend payout percentage of 53%. Keurig Dr Pepper is paying out dividends that its earnings should be able to support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 11.4% dividend per share CAGR over the past 3 years and a 22.6% dividend per share CAGR over the past 5 years. The rate of dividend growth has slowed over time, but 11% is still pretty good. The fundamentals of Keurig Dr Pepper are honestly kind of lackluster. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Keurig Dr Pepper. It is a beverage company with a gross margin of 55%. The 5-year revenue per share CAGR is 8% and the 5-year free cash flow per share CAGR is minus 19%. While the gross margin is good and revenue growth acceptable, free cash flow decline is very worrisome. A return on invested capital of 5% is low, but it is growing. Next, the cash conversion cycle of minus 137 days is very good. Keurig Dr Pepper has done a great job of shortening their sales cycle and lengthening their payment cycle. Concerning debt, a net debt to EBITDA of 3.8 means that it would take Keurig Dr Pepper nearly 4 years of earnings to pay back their debt. So from a fundamental standpoint, Keurig Dr Pepper has some strong points and also some weak ones. Now let's switch our attention over to valuation. Keurig Dr Pepper is undervalued relative to the S&P 500 with a ratio of 0.8. The price to earnings growth, or PEG ratio, is 2.9, indicating that Keurig Dr Pepper is overvalued relative to their projected earnings growth. Keurig Dr Pepper has been a very slow but steady grower for much of its time as a public company. However, falling free cash flow, low return on invested capital, and high but decreasing debt do not paint the picture of an ideal investment. Reviewing the news, we see that the coffee business might be the culprit for subpar performance. Volume consumption in the at-home coffee category declined approximately 3% in 2023 according to Keurig Dr Pepper. As a result, the company's US coffee business segment saw its full-year net sales fall 5.4% to $4.1 billion and its volume mix for the year declined 7.9%. Essentially, sluggish sales within the company's coffee business have been holding back growth. In a recent earnings call, the CEO had this to say: "The volatility was really driven by our expectations of a rebound," he said. "If you look at the actual trends beneath it, they've been pretty steady. Unfortunately much slower than we originally anticipated. This also bears out in the data. Looking at the segmental revenue split between US refreshment beverages revenue and US coffee revenue, we see that non-coffee beverage grew at a 9% CAGR over the past year while coffee revenue declined at a 5% CAGR. Clearly coffee is a shrinking business at Keurig Dr Pepper, which is quite surprising since coffee is a growing business at some other beverage companies and restaurants. If I was management, I might consider bringing on someone with more expertise to reinvigorate the coffee division. Otherwise, a divestiture of the coffee business may make sense. Given the free cash flow challenges and uncertainty around the coffee business revenues, I am not bullish on the company. For me, Keurig Dr Pepper is not going on the watch list. Many thanks for watching. What do you think about Keurig Dr Pepper, and please be sure to let me know what other companies you want me to analyze. Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.